Have you ever really wondered how a financial analyst actually builds a case for a stock? Well, today we're going to pull back the curtain on that. We're taking a real analyst report for the utility giant Duke Energy, and we're going to deconstruct it piece by piece to see exactly how the argument gets made. All right, let's jump right in.
So this whole thing kicks off with a pretty powerful hook. The report we're looking at, it basically shouts from the rooftops that Goldman Sachs, a huge voice in finance, has put Duke Energy on its best of the best list. I mean, that's a seriously strong statement, right? It definitely gets your attention.
And look, this isn't just someone's opinion. The report immediately backs it up with some hard numbers. We're talking a 14% gain just since the start of the year. Now, that's pretty significant on its own, but what makes it really impressive is that it's actually beating the wider market, the S&P 500.
So that's the big question, right? You've got this huge endorsement, you've got impressive performance, but why? I mean, what's really going on here? Why are all these analysts so bullish on what's, a power company? Let's break down their case, and we're going to start with the really big picture stuff. Okay, so before we can even get into Duke Energy specifically, the analysts first zoom way out. They look at the entire industry it operates in. And the whole argument here is that the company is basically sailing with some really, really strong winds at its back, just at the sector level. The whole positive case for the entire sector really boils down to three huge trends all happening at the same time. First, you've got this massive, super expensive shift over to renewables. Second, the regulatory environment is pretty stable, which lets these companies actually plan for that big shift. And third, and this is a big one, there's a fundamental increase in how much electricity we're all using. And that third point, well, it's a real game changer. We're not just talking about, turning on a few more lights. The report makes it super clear that the move to electric cars, and this is the really crucial part, the absolutely massive amount of power needed for AI data centers, all of that is creating this built-in, long-term surge in electricity demand. All right, so the industry backdrop is looking pretty good. Now the analysis zooms in. It's time to see how Duke Energy, the company itself, is set up to actually take advantage of all these big trends. So first up, just the basics. Who are we talking about? Duke Energy is a giant. I mean, it's one of the biggest electric utilities in the whole country, serving over 8 million customers. And where they operate, across 6 states, is super important, especially their stronghold in the Southeast. That's a part of the country that's seeing huge population and economic growth. So that scale, it gives them this enormous, stable base of customers.
So where's all their power actually coming from right now? Well, the mix is mostly natural gas and nuclear. Both are pretty reliable, but they've got very different long-term futures, right? And notice this, coal is still a pretty big slice of the pie, while renewables are just this tiny sliver. This snapshot of today, this is the critical starting line for the huge transition that's coming.
So, to jump on this whole energy transition trend, the company has a really clear plan. The analyst report hones in on 2 massive goals. First, a huge increase in renewable energy by 2025, and second, getting out of coal completely by 2050. You can see how this strategy ties directly back to those big industry trends we were just talking about. Okay, so we've seen the big picture industry story, and we've seen the company's game plan. Now it's time for part 3 of the argument, the evidence. This is where the analysts really get into the numbers, the financial data that's supposed to back up this whole buy recommendation. And here it is visually. Remember we said it was outperforming the market? Well, there you go. This momentum is a really key piece of the puzzle that analysts are watching like a hawk. Okay, before we get to the next number, let's just do a quick timeout to define a key term you're going to see, the PE ratio. It's a classic way to value a company. All it really does is compare the stock price to what the company earns. So, put simply, it tells you how much people are willing to pay for $1 of that company's profit. A higher number can mean people expect more growth down the road. So with that in mind, how do Duke's numbers actually stack up? Well, its PE ratio is sitting just under 19. For a stable utility, that's considered pretty fairly valued. You combine that with a really solid dividend yield, that steady income that investors love about this sector, and it's that 1-2 punch of valuation and yield that leads to the bottom line from analysts, a firm buy. This right here just adds some really important context. When this report came out, the stock was trading right up near its 52-week high. That just goes to show you the strong momentum we've been talking about, and it's a huge part of the short-term case the analysts are making.
All right, but no good analysis is complete without flipping the coin over and looking at the other side, right? A solid report doesn't just tell you all the great stuff. It also has to lay out what could actually go wrong. So this is where we balance that optimistic case with the potential risks.
And this really lays out the core tension of the whole investment idea. You've got this push and pull, right? On one side, you have these powerful things pushing it forward. That big Goldman upgrade, a dependable dividend, and all that market momentum. But on the other side, you've got some significant risks pulling it back. These kinds of companies are super sensitive to interest rates, regulations could always change, and let's be honest, that clean energy transition is going to cost a ton of money. It's all a balancing act. So after breaking this whole report down, we're left with this one central question. The analyst's case, it lays out a really clear path forward. It's built on these big sector trends, a smart company strategy, and solid financials. But the journey is definitely not going to be a straight line. So will Duke be able to manage the huge costs and all the regulatory hoops of this green transition? Or could something bigger, like rising interest rates, cause a kind of power surge and interrupt all this momentum? That right there is the big question at the very heart of this entire analysis.